Okay, let's unpack this. Imagine starting your career earning just 25,000 euros a month. For you listening right now, could you ever picture becoming a crorepiti that's, 10 million, not through some lucky break or inheritance, but just smart, disciplined choices over time?
Well, what's fascinating here is that the source material for this deep dive isn't theory, not at all. It's the specific, true story of one ordinary salaried individual in India who did exactly that. Built 1 crore over 11 years, starting from that very Ur 5,000 salary.
Wow.
Yeah, it offers a real-world shortcut, kind of, to understanding how it happened.
And their guiding principle, the belief that drove it all, it's simple, but really profound. It's not how much you earn, it's what you do with what you earn.
What really stands out is their starting point back in 2013. A fresh graduate, 25,000 salary, zero family wealth, just dreams and critically disciplined.
Now, they didn't wait around, did they? The crucial early decision was jumping right into investing through SetPiece.
Right away.
That's systematic investment plans and mutual funds.
Yeah.
Year one.
Yes, consistently putting away a significant portion. They started with like 30-40% of that initial salary. And as their income grew, they aggressively ramped it up, sometimes investing up to 75%.
75%? That's huge.
It wasn't just saving. This was strategic investing with a fierce belief in compounding.
Like planting money trees, sort of. They just kept watering them monthly, letting those returns quietly grow on themselves over time.
That focus on the long term also shaped how they viewed market volatility, which brings up an important question. How did they handle the inevitable market crashes? Did they panic like most people?
Not at all. This is where it gets really interesting, I think. They took a totally counterintuitive approach. They saw market crashes as discounts, not
disasters. Yeah, exactly. Huge discounts.
They actually increased their SIPs during downturns because, in their words, that's where the real money is made. Buying low.
This perspective is absolutely key. It turns fear into opportunity. Buying assets cheaper during dips, leveraging that for potentially higher returns down the road.
Right. And beyond investing, their approach to spending was just as strategic, wasn't it? They committed to minimalism, actively avoiding what we call lifestyle inflation.
Yeah, that's when your spending just creeps up because your income does. They kept it simple. Simple meals, a rented apartment, kept an old phone. This wasn't about deprivation, though.
No, it was about prioritizing saving aggressively.
Exactly. They lived by the rule. Don't buy it unless you need it.
And how much could that save? By avoiding debt traps like personal loans and EMIs, those fixed monthly payments, this approach let them save truly incredible amounts, sometimes up to 1 lakh per month as their income grew.
An EMI-free life, they said, is a stress-free life. Makes sense.
Totally. But it wasn't just about cutting expenses and investing, right? They were also strategically focused on the other side of the equation.
Increasing their income, absolutely.
Oh, yeah. They actively upskilled, switched jobs for better pay, took on valuable responsibilities. Their salary didn't stay at 25,000 tile. It grew substantially over those 11 years, reaching over 2.5 lakh per month.
And this significant income growth was critical. It fueled their ability to invest even more aggressively. It created this powerful, virtuous cycle.
Like pouring fuel on the fire.
Yeah. And while doing all this, they were vigilant about avoiding financial traps.
Steering completely clear of get-rich-quick schemes, chasing crypto hype, playing with penny stocks, or speculative trading. None of that.
They respected money by playing the long game, not lottery games.
It's about patience and fundamentals over fads and speculation. They just stuck to the plan.
So what does this all mean after 11 years of these deliberate, consistent choices? The milestone. A net worth of 5 crore.
5 crore. Wow.
That included 3 crore in investments and euro 2 crore in real estate, all completely debt-free.
It wasn't an accident. It was deliberate building, brick by brick, rupee by rupee, you could say.
Absolutely.
So the key takeaways from this journey are, I think, crystal clear for you, the listener. Start early, even small. Be consistent. The market rewards patience. Spend wisely. Really save before you spend. Upgrade your skills because higher income fuels investing. Avoid debt. It's a wealth killer.
And critically see market dips as opportunities, not reasons to run.
Yeah, that's a big one.
What's fascinating here is that there was no hidden secret formula, no magic trick. Their superpower was simply discipline, applied consistently over time.
So if you're listening, regardless of your starting point, maybe remember this thought from the source. You don't need a windfall to create wealth. You need a vision, a system, and a calm mind. If one person can turn 25,000 into 5 crore in 11 years, debt-free,
Yeah.
Why not you?
Start today. Start small, but start.
The best time to plant a money tree was 10 years ago. The second best time is now.